We see an opportunity to do what's right, to change business as usual, to become business as it should be, where people don't just live and work, they thrive. To do that, Colliers is committing to elevate the way we do business, to elevate the built environment. We will minimize environmental impacts in our own operations and through the services we provide our clients. We will increase diversity and inclusion in Colliers and across our procurement practices to create an atmosphere welcoming of diverse ideas and perspectives. We will promote health and well-being in our operations and through our client services to help improve lives. Together, we will elevate the built environment and build better for our collective future. For ourselves, for our clients, for our communities, for the world.
The Wallace Business Forum is a 30-year-old think tank that provides a valuable link between the country's top business leaders and the leaders of government. It helps CEOs to understand the environment within which they must operate through a series of publications and meetings that access the business, political and economic environment and predict where we may go. WBF is considered one of the most authoritative, independent sources of information and assistance in understanding in the Philippines. We tell it like it is.
several leaders of economies today reminded APEC leaders to focus on economic synergy and cooperation on this year's APEC.
Welcome to Boracay, the Philippines' most famous beach.
We have covered the journey of our young democracy. In ANC, we were witnesses to the defining moments of Philippine history that influenced the world.
To the service of the nation.
We talk to leaders. We don't shy away from difficult conversations.
ANC Leadership Series.
We don't just tell stories, we tell you why they matter. We sift through the noise and arm you with facts.
We report about disruption and how the latest technology and innovation have changed the way we live.
We told stories about crisis, but also about opportunities that came with them.
This is the Philippines.
And we are ANC.
Good morning, everyone. Happy Year of the Tiger and welcome to Colliers' first property briefing for 2022. We're very excited to share with your latest data and insights on the Philippine real estate market. This webinar will cover the performance of the office, residential, industrial, and hotel sectors for the fourth quarter of 2021. I'm sure we're all going to learn a lot today, which will help us make better and informed business decisions for the next 11 months in 2022. We have a great program for you today, so I hope you will stick around till the end. But first, let us acknowledge our partners who made this webinar possible. British Chamber of Commerce of the Philippines, Canadian Chamber of Commerce of the Philippines, the Wallace Business Forum, the Department of Human Settlements and Urban Development, Business World, the ABS-CBN News Channel, and the Philippine Daily Inquirer through Inquirer Property. I'm Maricris Sarino-Joson, Director and Head of Office Services, Landlord Representation, and I will be your host and moderator for today. I again encourage everyone to stay for the open forum at the end of the presentations where experts from Colliers Capital Markets, Advisory, and Valuation Services will be present to answer questions you might have regarding the property sector. You may send your questions through the chat box. If for any reason we are unable to answer all these questions, we will make sure to reach out to you via email after this webinar. Also, we will be sharing with you our fourth quarter 2021 property reports, which you may download via the links we will send through the chat box. If you're able to download the reports today, do not worry. We will send them via email newsletters after this webinar. You will also be able to access these reports through our website, colliers.com, and watch out for announcements on our official social media accounts. So make sure you're following us on LinkedIn, Facebook, Twitter, and Instagram. So with that, let's begin our webinar. Our experts have meticulously organized data from October to December of 2021. Of course, this data will mean more with our experts' insights and recommendations to help us make better and informed business decisions in response to changing and challenging times ahead. During our last property market briefing held in late October, we predicted that net absorption in the office sector will remain negative and lease rates to continue to decline due to the subdued leasing and rising vacancy. However, remain optimistic that office deals will slowly pick up in 2022. In the residential sector, take-up of units in the secondary market remained lackluster due to slower demand from the poker industry, expats, and local professionals. But we also projected rents to slowly increase this year amidst increasing vaccination rate, easing of lockdowns, and government-projected economic recovery. Speaking of economic recovery, the Philippines' GDP expanded by 7.7% in the last quarter of 2021, bringing full-year growth to 5.6%, further boosting optimism about the rapid rebound this year. But as we all know, the Omicron variant of COVID-19 has shown us another curveball. We saw daily cases reaching almost 40,000 in mid-January, while the government put in place restrictions on mass gatherings and some services. Thankfully, however, the impact of this new variant on our healthcare sector has not been as severe as previous surges. So how will this recent turn of events affect the real estate market? What do these gradual improvements mean for the sector? Are we finally putting the pandemic behind us? We hope to answer these and more in this webinar.
And on that note, I turn you over to my colleague, Chris. Chris?
Thank you, Joey. Fantastic presentation as usual. Good job, Joey. Thank you, Joey and Dom. I'm glad we are seeing positive indicators for this year. So I'm seeing many questions in our chat box, and I'm sure speakers and panelists can't wait to answer them. So let me introduce them. First is Colliers Managing Director, Richard Raymundo. Morning, Rich.
Hi, good morning.
Morning, Richards. Next is Senior Director of Advisory Services, Theresa Teodoro. Morning, Tim.
Hi, morning.
Next is Director for Capital Markets and Investment Services, Paul Chua.
Morning.
Morning, Paul. So I'm going to be calling Paul. See, we have two Pauls in Colliers. And next is Senior Director of Valuation Services, Paul Vincent Ramirez. Good morning, Paul. Paul R.
Yeah, good morning.
And I would also like to invite Dom back on screen to join our panel. So let's start with the questions. First comes from Union Bank of the Philippines, Andres Alcantara. Are there still residential developers that push projects despite the pandemic? Tim?
Yes, the developers still pushed during the pandemic. We saw launches from SMDC, DMCI, Robinsons. Usually developers, NSJB, usually developers that play in the 2.5 to 6.5 million range. We saw those launches earlier this year up to maybe third quarter. But even in the fourth quarter, we also saw more launches from the upscale to luxury segments as well. And so we expect them to continue launching this year, especially with the economic forecasts being better compared to last year's.
Thank you, Tim. So Daniel, I think this answers your question. Is it advisable to launch condo project this 2022? So based on the answer of Tim, the answer is yes. Continue to launch projects, Tim.
Yes. But of course, you just have to see in your particular location what the gaps are in terms of product pricing and your payment terms. And you have to strengthen your selling proposition, so you make sure that you incorporate the trends that you see happening with the buyers, especially with work from home and the health priorities.
Okay, Tim, another one from Beverly Lopez. During the pandemic, we've seen very good deals from property developers, such as down payment at 0% interest stretched for 36 to 48 months. Do you think this will become part of the new normal, or do you see this go away as soon as the economy opens up?
That's the typical really for down payment. I mean, there's really no interest during the amortization periods. And actually, right now, the 36 months to 48 months is actually longer right now. We've seen developers offering up to 72 months in terms of amortization period. This may be a function of either helping it become more affordable to the buyer and also some constraints in terms of when they can complete their developments. But when things normalize, it might go back to a shorter period.
Thank you, Tim. Joey, what type of recovery will the property sector achieve in 2022?
We're all hoping for a V-shaped recovery, but I think it will be a slow, gradual recovery. The Philippine economy is projected to grow faster in 2022, and we hope that the property market also piggybacks on that growth. But I think it also depends on the segment. So we're likely to see some recovery in the residential market, secondary market. So in terms of leasing, so there will definitely be some rebound. Office leasing, as Dom mentioned earlier, so there will be an improvement in transactions. Retail, so there will be revenge shopping and dining. For hotel, I think this is one of the most affected segments, but it will be the domestic travel that will lead the recovery of this sector. So at this point, it will be a I'd say it's a mixed bag, especially if you consider all segments. But the fact that more people are now allowed to go out and travel and report to work and visit physical showrooms, these all point to some form of recovery in the property market.
Thank you, Joey. Hope it answers your question. Rizal Reyes from Business Mirror. So recovery in 2022. Tim, another question from Brian Barella, SMDC. What is the projected demand for resale of mid to high-end residential condominium units in Metro Manila in 2022 and onwards?
Resale units, I assume, is like units that were from backouts and being resold now in the market. And the demand for it, you're basically sharing the same pool of buyers as you would with the newly launched projects. It's just that resale units tend to be closer to completion than the new ones. So in terms of amortization period, it may be shorter. You have to be more creative in terms of your payment terms to lessen the difference compared to the newly launched one, extending it beyond probably the turnover of your project, or allowing for an early move-in type of promotions. But there are also investor groups that still buy some of these residential units in bulk, though of course there is some discount to it. Our CMIS group headed by Paul has handled requirements for that. And I guess it's interesting that there's still interest for that kind of transactions because these investors, they're looking at the market recovering in a few years. So I think that's a good indicator as well. And then of course, for the developers, another strategy is to lessen the incidence of resale units. It's easier to keep your existing buyers than actually to get new ones, especially given the competition. So you should look at understanding the reason behind the backouts, check the profile of the buyers and maybe see if you can somehow allow for a more special or modified payment terms to maybe extend to your buyers.
Thank you, Tim. Paul C. from Theresa Corton, Pro Life UK. Will investors get better deal if they sell their properties now or better wait it out? Paul C.
I guess it depends on your investment horizon. So, and obviously it also depends on what type of asset you're holding. I think it was mentioned earlier with the Foreign Services Act, the new foreign experts coming in. We should see an influx of new expats coming in. So if you're holding a larger 3-bedroom unit in the CBD, then perhaps holding onto it would be better because you'll be able to lease it out eventually. If it's a smaller unit, like most of local investors have, maybe find a good broker. That's my suggestion, so that you'll be able to maximize whatever you want, no, for your property.
And no better broker than Colliers, Paul. So Carissa,
Of course.
please do reach out to us. Dom from Eric Nielsen, Global Process Manager of Magsaysay Group. In an IBP meeting, DG Plaza of PEZA said that they will lobby the government for the withdrawal of AO18. Do you believe this is needed given the closure of many POGOs and the reduction of their office footprint by many companies?
Yes. Sorry. Yeah, I know that. I know that. I didn't answer yes. I know that what transpired in that meeting, that PEZA is lobbying for the lifting of the AO18. But we've shown in our slides that there are a lot of PEZA spaces available in Metro Manila, like 1 million square meters and another, I think, 400,000 square meters in the next 2 to 3 years. On top of that, there's that harmonization of the incentives already across the different investment promotion agencies. I think at least for this administration, the direction is very clear, which is to decentralize, open more avenues for investments, not just PEZA. So let's see what's going to happen depending on the results of the national elections, and let's see. But I think moving forward, once the market recovered, say, over the next 2 to 3 years, then there may be a need for more PEZA spaces in Metro Manila.
But Tom, with the signing of the CREATE law, there shouldn't really be no difference between BOI and PEZA, correct?
Theoretically, correct. But we know that, of course, I mean, the bureaucracy, the practices, the politics behind all these things, you know. So there are a lot of things to be considered, and nobody has tested that yet. I think that we will see one or several others testing that theory soon, and we will see how it pans out.
And we'll be waiting for the SIPP from FIRB.
Yeah.
Tim, from Francis Tan of Dolmar, status of vertical project sales velocity in NCR and surrounding areas. What is the future of vertical projects since we see a lot of interest in horizontal projects now? Tim?
We had a graph earlier where we showed the net demand for 2021 was substantially lower. No? So that's where more or less you get your status. But for the newly launched projects that we were monitoring for fourth quarter, they are actually selling well, no? Already around 20 to 30% sold, and some are even higher. So new reservation sales are coming in. The net demand was just affected by cancellations in the market or backouts. But moving forward, given expectations, again, that the economy is going to improve, we also expect the sales to improve. And in terms of the future of vertical developments, that has also been evolving. So the work from home trend is there, and we've seen developers launch like Soho units or incorporating workspaces as part of their features, and then amping up their green and technology features to also address both the safety requirements and also the new work requirements of its residents. So more or less that's it for that question.
Thank you, Tim. For Paul R and Paul C, what will demand for real estate return in 2022? What are the top locations that saw appreciation in property values in 2021?
Okay, so let me take that first. So there will always be demand for real estate, even during the pandemic. It just shifted from property type and to a certain extent, location preferences, like shown by Joey in his presentation. So will it return to pre-pandemic demand? Maybe starting this year, considering that we seem to be in the tail end of the pandemic, given the mild effect of Omicron. So far, so good. There will, of course, be longer-lasting changes that will affect the overall dynamics of real estate, from how we work, how we study, how we shop. So all these must be taken into consideration. As to where we saw property appreciation, so we've seen some nearby leisure and residential communities in Laguna, Batangas, Pampanga, and Cavite being the natural extension of the metropolis with larger space options for, lockdown weary city dwellers. We saw growth in those areas.
Thank you, Paul. Paul C?
I think to echo what Paul R. has said, there are several industries naman within the real estate sector that showed demand even during the pandemic. One of them is industrial. Definitely, it has remained resilient even during the height of the pandemic. Dom reported even at the start of the year where we have 40,000 cases, there's still closing transactions. So I think there is the demand, but like Paul said, it has shifted somewhat into other locations. The preference for a house and lot outside of Manila. But now I think since it's starting to slow down, maybe people will start coming back again into the CBDs since we're opening up the metro. So yeah, I guess that's it.
Thank you, Paul. Paul R. from Jules Obado from San Miguel. Have there been significant changes in the real estate sector last year? How significant was the decrease or increase in properties value due to the pandemic in 2021 versus 2020?
Yeah, I think we should consider that in 2020, everybody was caught unawares of the pandemic and how it negatively affected most sectors: office, resi, hospitality, retail. However, on the second year, like Dom said, we are quite used to it. We've learned to manage, expect, and live with it. And we are adapting to this new normal. So the changes or effect, while it's still significant given the data that we've shown, it's mitigated already. Anecdotally, in terms of the changes in values and prices, we've seen luxury and leisure residential communities are up. Prime commercial land, considering its scarcity, seen to remain stable still.
Thank you, Paul. Dom from Remax, Juan Patag. Are local companies going to continue with work from home setup? I know that banks want their employees back in the office. So Dom, do you think local companies will continue work from home?
Yeah, so she's correct. It depends on the company and the operations and the maturity of the company, as well as the work being done. So for financial services, I think that's something that would have difficulty migrating to significant or full-time remote work. So that means most of them will go back to work. With respect to the local companies, the other thing that should be considered is that the advancement in the technology being used, or how prepared are their employees in terms, or how adept are they in terms of the technology use. So if they struggle with that, then they're better off operating in the office, because they're gonna encounter a lot of challenges if their employees are not skillful in using their computers and the various apps needed to operate in a remote mode.
Yeah, I agree with you, Dom. I think companies really need to assess the readiness of their internet of the workplace connectivity to assess the percentage or split between work in the office and work from home. So thank you, Dom. Another question from Papa Securities, Jules Cruz for Tim. How did the changes and lockdowns affected residential demand? Are the vacancies in the secondary markets affecting the willingness of developers to launch new projects?
Well, stricter lockdowns did dampen demand for buyers because it created uncertainties in terms of their income sources, or they may be more cautious. And for the investor type, concern also of sources of rental income, no, for their condominium projects. Though of course, like mentioned earlier, the economy is going to improve. We vaccinated a lot, and there's more freedom in terms of mobility. So OFW remittances continue to pour in. So there's increasing stability, and this will help, increase the resumption of demand for residential condominiums. And also, of course, there are markets, international markets that can be tapped, where some of our OFWs are based and whose economy has already picked up or stabilized. So being able to reach those buyers is also a lot of developers are really focusing on that. We don't really see vacancies right now, to affect the developers' decision to launch new projects, since they're really more looking into the sale of the unit, and for the buyer, completion of the unit is like 5 to 6 years from now, where vacancies might have normalized by then. So it's more of developers, when they look at launches, they probably look at their existing capex and being choosy where they position, as well as completing their existing developments.
Thank you, Tim. Dom, from Jules again, Papa Securities, are the vacated POGO spaces mostly PEZA accredited? And are they now in high demand? Given the scarcity of PEZA accredited spaces in Metro Manila, how soon will these vacancies get filled?
So there are a lot now. So there's no more scarcity of PEZA spaces in Metro Manila. In fact, there are 1 million square meters available PEZA spaces. So what's the other question, Chris?
Another question from Jules, I think, we've answered that already in our presentation. So no more scarcity in PEZA supply with 1,000 square meter of available PEZA space. Regarding the requirements of tenants in terms of square meter per employee, is this going to change moving forward? As many firms have been redesigning workplace, designating some employees as full-time work from home, what would be the average square meter per employee for each type of firm? So this is density, Dom.
Yes, so it varies depending on the company and the operation. So if we talk about, say, the FMCGs or the other multinational companies who used to implement more than 10 square meters per person, now they're trying to rationalize that in order to generate savings in the short term. So they're moving towards 8 square meters to 9 or 7 to 9 square meters per person. And that is also in line with the implementation of the hybrid work model. So what's interesting is that even prior to the pandemic, most of these companies, especially the FMCGs and the multinational companies, are already bent on implementing the hybrid work model. It's just that this pandemic accelerated the adoption, and the availability or the advancement of technology was also fast-tracked. And if before there were a lot of questions with respect to the success of this hybrid work model, that was already answered during this pandemic. So some companies that we're talking to are very aggressive in the implementation of this. We're talking about 40 to 50% reduction in the office space. Now, it's based on, it depends on the tenant, right, or the company. So if you talk about the call center business, I think that they used to operating in a very high density manner, say 5 square meters per person. I think that's gonna loosen up a bit, probably 6 or even 7, and provide more open collaboration spaces for employees. I think what we're thinking of is that they have to bridge the gap between, because over the course of 2 years, employees are now used to having a home environment while working. So that's something that they should mimic when they renovate or design their new offices.
Dom, another question from Jules regarding office rental rates. With a sector-wide decline in rents, how can landlords remain firm in their stance of keeping rent stable or escalating?
I think it's not about that. I think it's all about occupancy right now. Being more accommodating in order to have higher occupancy and keeping tenants in their building. So I already shared when I was presenting that some landlords may opt to protect a certain level of base rent, but that is not to mean that they're not flexible in other areas like escalation, rent freeze, and sometimes tenant improvement allowance. So they should look at the overall deal structure and be creative in coming up with these structures that will address tenant concerns.
Thank you, Dom. Joey from Lane Sevilla of Brockwell. What's the travel outlook for 2022? Are there any improvements with domestic and international tourism forecasts? Are we seeing quarantine requirements extending until December?
Well, for the domestic tourism, I think the forecast is between 30 to 40 million for 2022. So, but that is still much lower compared to the peak of about 90 million pre-pandemic. That was in 2019. So again, there will be an increase in domestic, local trips, but that will still be significantly lower compared to what we saw pre-pandemic. But the problem with the leisure sector is the recovery of the global market. So you have the likes of China, Korea, Japan. If you saw my slide earlier, all are significantly down compared to year-on-year data. So again, the global air travel is likely to recover 2023, 2024. That is based on IATA's projection. So it will still be the local tourists that will drive the market, but it won't really be significant compared to pre-pandemic level and won't really be able to offset the decline in foreign tourists. In fact, according to some market studies, one foreign tourist is equivalent to one job already in the leisure sector here. So that only gives you an idea of how much a foreign tourist spends here in the Philippines. Of course, that is much higher compared to how much a domestic or local travel spends here, right? So again, it will still be, again, based on our projection and based on the projections of other international travel associations, it will be a slow, gradual path to recovery.
Thank you, Joey. Slow, gradual path to recovery for the tourism sector. Joey, from Melvin Ganaden, what are the latest innovations on the real estate industry? Housing projects, subdivision developments, and pricing here in the Philippines, particularly in Metro Manila. And then Tim can answer after you.
Well, not really innovations, but I think these are just some of the trends that we have been seeing pre-pandemic. For example, virtual meetings. So this is one way of touching a base with more clients, potential buyers. But during the pandemic in 2020, we saw more of these webinars to touch base with their potential clients and buyers, especially for the overseas market. So in my case, I would have webinars for developers that are targeting Filipino buyers in the Middle East, for example, or Northern America, those regions. So they've been targeting those, and to attract more buyers and to introduce their developments, what they would do is to firm up and hold those virtual meetings. You also have, for instance, during the pandemic, the introduction of virtual showrooms, the less physical contact to the facility. So you have the QR code. So just to ensure safe entry to these residential developments. So these were some of the innovations that were implemented. But I think in terms of developments, again, as we saw, 2021 record launches for Metro Manila condominium market, and they might want to add a few more insights on that.
Joey more or less covered already the innovations when it came to the marketing of the project and also some of the features of the development as well. I guess I just like to emphasize again, maybe the work from home trends that's happening and how developers are already incorporating those also when they do their when they plan for their development. So incorporation of co-working spaces in not necessarily condominiums also when they also look at more integrated estates, having a hub there also is part of the appeal of a mixed use development.
Tim, from Megawide, which location should you look into to penetrate affordable housing market?
South of Metro Manila is very strong, especially since they're able to also tap the Metro Manila market. So like Cavite, Gentry, Tanza, Batangas also is good, Tanawan. So look at the newly completed or like upcoming infrastructure projects, CALAX, the LRT, the CityBEX. And then for the north, of course, Bulacan with the airport coming up. And I think Joey shared earlier also a big industrial estate that's going to be developed there. and it's also proximity and connectivity to Metro Manila with the existing MRT. And then Pampanga actually is also emerging. I mean, pretty okay also for affordable, especially near Clark. So, yeah.
Thank you, Tim. Dom from DBP, is there a possibility for vacancy rates in Metro Manila's major CBDs to decrease from double digits to single digit this year in the next 2 to 3 years?
Realistically, or possibly, not this year. Definitely not this year. Probably, hopefully 2023 onwards. If we come out of this pandemic phase successfully soon.
And if there's really POGO rebound, Dom, if POGO rebound comes 18% to 12%,
it's beyond our hands. But again, in terms of the openness of the country, I think it's open for POGOs. But
definitely we have all those laws in place already to attract more investments in the Philippines. So positive indicators for the years to come. Marie of DBP. Richard, what will drive growth in 2022 from Net Igilo, Rebap LMP chapter? Rich?
I think what will drive growth would be, if you look at it per segment, in certain per office, you've mentioned that transactions are now starting to recover. Definitely the transactions in 2021 was 17% higher than 2020. So we're already seeing the trajectory. So that is good. POGO is the wild card. If that happens, as Dom has said, maybe we go down to a single digit level in 2023, 2024. So that's the good thing. For residential, some stability in the interest rates, probably that it doesn't go up further. That would be good. Another one is the work from home. If work from back to the office, when people go back to the office, maybe the CBD becomes attractive again. So people will start to rent out condos in the office and buy condos, and then developers will start to develop. So that's good. Retail is interesting. That could be the fastest rebound that we could see. Now, I was surprised with December when we were already back to pre-pandemic mall traffic. And Joey mentioned this before, that that could be a very quick V recovery for retail if indeed this Omicron is the last stage. And then we see an endemic approach to COVID. Maybe this retail could be the fastest recovery amongst other sectors. So those are the things that I'm watching out for.
Thank you, Rich. For both Pauls, Paul R and Paul C from Nixon Go, PNB, which location should we target for 2022 for personal purchase for residential or commercial? Top picks, Paul?
I'll go first. Okay, so for 2022 and beyond, I think investors should look into where the infrastructure corridor is being planned by the government. I think this is where we can see a lot of values being unlocked. So the completion of Calax, we're looking at the subway and all the other infrastructure in place, the airports and the like. These will be the areas that they need to look into very closely for their next investment.
Yeah, same for me. We get a lot of inquiries regarding these locations that are transit oriented. The upcoming hubs that are coming in the north, in Metro Manila, and all of that. So looking at those areas would be a good investment choice. On a personal level, it's very subjective. Personally, I'm a condo dweller. So if I'm looking to purchase something, then I would have to look at the payment terms. So I think we still have good payment terms at the moment. So if you're looking to invest, then this would be a good time to buy also before they shorten it.
Paul C, any particular real estate development that you think will do well in 2022?
Personally, I think industrial will still do very well. In fact, we barely scratched the surface in two of the subsectors of industrial. So outside of the typical manufacturing and warehouse, cold chain and data centers. So, I mean, the market is huge in Asia, and we're here and we can benefit from them. So moving forward, I think that's the way to go.
Exciting times for the industrial sector, Paul, especially with the new laws in place as well. Dom, from Rachel Cano, Plarab, how can we address office workers who are afraid to go back to the office? How can we motivate them to embrace change?
Well, one is do office renovations, design modern workspaces that encourage employees to go back. Richard would want to expound on how we incentivized our employees to be vaccinated.
Yes, Richard did a good job in making our office feel like home. So please do visit us in Colliers.
Yeah, and then incentives, Richard, right? We did raffles to increase the vaccination rate in the office. So
yeah, we got to the 100% vaccination rate, and we're now boosting people. So we had some people who didn't want to get vaccinated before. We did an education and drive, and we explained why it's needed, how we can get back our business if everyone's healthy. We got back this year, and some people got infected with Omicron, but it was all mild cases, so that's good, and that's all we can ask for, right? And hopefully, as Dom said, we get back the great return. Hopefully, happens this year, right, Dom?
Great return for the office sector this 2022. Dom, from Lala of Manuela Corporation, what is the average office rental rates in major Metro Manila CBDs and provincial locations as of Q4 2021?
Yeah, it's locational, no? If you've seen that graph showing the different vacancy levels, so Makati and CBD would still be in the 1,000 and above level. Ortigas, Mandaluyong could be in the 700 or below. Bay Area could be in the 800 level. So it depends. It really depends. But of course, those are just headline rates. My suggestion is to really consider who you're talking to, the tenants, the profile, the credibility, and see how you can partner up for a long-term period by crafting a nice deal structure to have them in their building.
Thank you, Dom. Rich, from Ray Veliana of Manulife, what challenges and opportunities facing local REITs in the coming months?
The opportunities is, I would say, you're now going to see REITs increasing their net asset values by infusing more assets. And all of the REITs are already planning that. It's in their strategy. They're already saying how much space they will be infusing, from Ayala to the most recent RLC and Meg REIT have all now come out and said, okay, this is the plan, is infusing more assets. So that will now increase the asset base, that will now increase the value of the REIT company. So that's interesting. So that's an increase in REITs. Probably the challenge right now would be, let's see, interest rates. Let's watch out for interest rates. And if there are new variants, again, that will delay some asset classes to be included. Good example, let's say retail. The reason that retail hasn't been included in as an asset class in REITs these days is because of the performance is still not as good as office. But once we get out of this pandemic and the retail sector improves, that is a big opportunity for developers with a good retail base to start putting it in the REIT company. That's another asset base to put in. Hotel is another one. Eventually, when that gets over the COVID issue.
Thank you, Rich. Tim, from Romel Balustrino, DMCI, please tell us more about upcoming trends in the Philippine residential market and how can we target both local and international markets?
In terms of upcoming trends, some of that we've mentioned already was really flexible payment terms to make it more affordable to the buyers and create less friction and get them into your development. Of course, strengthening how you market online. That's also quite important, especially if you're targeting international markets. Joey shared earlier his experiences with some of the other developers, I guess, with their events, marketing events with targeting the international buyers. And then, and I think for some of the, when if it's already possible, already doing roadshows to establish your networks with the international brokers abroad.
Thank you, Tim. Rich, another one for REIT. What is your opinion on logistics and solar farm REITs from Maria Cristina Legaspi?
Yes, Joey has mentioned that long before as one of the asset class that could be included in the REITs. You can put anything in the REIT as long as it is income generating. And it's interesting that it's refreshing that it's something different, that it's now with power generation, infrastructure, solar, that's about to be listed. So that's something interesting to look out for. There's liquidity in the market. Of all the REITs, if you aggregate all of the REITs that have been listed, we have already gotten close to 80 billion pesos in funds from the market for these new IPOs. And there's room for more. So that's exciting. I think variety it's a good thing, and the diversification is a good thing.
Thank you, Rich. Joey, from Van Chua, ACBK, during the latter part of 2021, everyone was hopeful that COVID-19 has been slowly contained. With the Omicron surge that happened early January, there are concerns that the lockdown might happen again. Will that affect recovery period of the real estate market if another variant comes along this year?
I think the Omicron variant showed that it is a variant that spread faster, right, compared to previous variants, but it is not as severe compared to the Delta variant, for example. I think it still depends on the social, physical distancing protocols being implemented, strictly being implemented by the government. It will all depend on public health interventions that the government will implement. But again, recovery will likely hinge not just on the control of the COVID-19 virus or of any variant, but on several factors, and that includes the economic growth and other regulatory reforms that the government recently enacted. And there are some sectors saying that the results of the elections will also have an impact on the property market. So let's see moving forward what will really shape and redefine the recovery. Yep.
Paul R. from Regina Saga, would rising prices and building materials affect housing prices here in the Philippines? Paul R. or Paul C?
Okay, so actually our housing prices is market driven. So how developers will adjust to that really is they will have to reduce the profit margin that they're taking. They'll have to do cost engineering works. They have to replan in order to maintain the margin that they have. But yeah, it can increase real estate prices, but it's really the market. So they have to put their ear on the ground and see what the market levels are, what the market can afford. So whether they need to adjust the prices up or just adjust their income expectation, that will be the key.
Paul C, anything to add?
I think in terms of the supply, usually there are supply agreements done by developers. So more or less they fix their supplier's price at least up to a certain level. But then once the threshold is over, then you see the uptick in the prices. But I don't think it's at this point that it will affect the prices so much that it won't be affordable. So at the end of the day, the developers will still think about, how affordable will my product be. So like what Paul said, value engineering will happen, extended payment terms will also happen. So there's a lot of things that can be done to make the house affordable.
Okay, from Denise Esta, will the land value in Central Luzon increase because of the new government infrastructure projects in the area? Paul R., Central
Oh,
Luzon, land value.
yeah. So land values will always increase. So this infrastructure project will really unlock the land values in the area. And there's been a lot of speculators already in planned government infrastructure areas. And we've seen this when SETEX was constructed, when Calax is currently being constructed, we've seen uptick in land prices, land values in those areas.
Paul, another one about Marilao and Bukawe. Will the North Wind project in Bulacan affect the supply zoning of industrial lots? Paul C?
The Northern Luzon has been a very good location for industrial developments. I think we mentioned earlier the first Bulacan Industrial Park is, reimagined itself to be the central pharmaceutical hub. So, any new improvements in the north will definitely help that corridor all the way to Tarlac, where the new central logistics hub is being done. So, yes, anything done north of the Philippines would definitely improve those areas in between. So, yeah.
Okay. Tim from Philip Cristobal, how come more developers are still launching new projects while take-ups are decreasing? Tim?
If you're referring to the slide that we showed earlier on net take-up, that takes into consideration there were cancellations or backouts in the market. And so that's why it's more tempered. But if we just look at like the newly launched projects, they're actually doing quite well. As I mentioned, the ones that we were monitoring for fourth quarter, they were doing 20 to 30% sold sales even if they just launched during the fourth quarter. So reservation sales or new sales are still coming in.
Tim, another one from Avon Manankil. You mentioned growth in the residential horizontal market. From which segment is the demand highest? Economic, affordable, upscale, or high-end? Tim, you're in mute.
It depends. So if it's lots, it's usually more high-end. We saw a lot of sales in the luxury segment for lots, especially in the Laguna area. And then affordable also in terms of house and lots. So we are monitoring a lot of sales activities for the affordable market, Cavite, Batangas, economic also, affordable is also Bulacan, and then economic in Pampanga.
Okay. Tim, another one, Marga Hervasio. With the decrease of POGO users in our country, who will be our probable demand users in the condo market in the coming years? Most likely, who will be our probable target market, especially in the high-price condos with no POGOs?
They invest the condominium market for POGOs. Is more or less limited to certain areas. So it really depends, no? But if you look at the locations of those, they're in very good CBDs. So if not POGOs, eventually some other form of tenant type will take the place of these POGO locators. And the workers for that will eventually be also your target market for the leasing portion of it or even for the sale portion of it.
Okay. Joey from Katrina Tordilla, do you see domestic tourists willing to stay at higher rates and more expensive accommodation?
I think that depends on the location and the tourist destination where they're planning to spend their vacation. But what we have seen, and based on the slides that I showed earlier, there has been a substantial drop in average daily rates of hotels, especially across Metro Manila. So you have the likes of foreign branded five-star hotels. You'd see a 30-50% reduction in average daily rates, especially those that were used as a quarantine facility. So the increase, of course, in average daily rates, it will be demand and supply play. If there will be more tourists that are willing to stay in these hotels, definitely rates will probably increase. But the question is, will that happen in the near term? That's unlikely to happen. And there has been an increase, mainly because of some of these hotels being used as quarantine facilities. But if you are to ask if these rates will revert to pre-pandemic rates, we don't see that happening in the near term, at least in the next 12 months.
Okay. Joey from Miguel Baluitan, may I ask your advice on the advantage of investing in high-end vertical project in Makati, like Park Central Tower, versus high-end properties like Bellevue in the US?
Tim would like to, maybe Tim would like to add insights on that.
Sorry, can you repeat that?
Can I ask your advice on the advantage of investing in high-end vertical project in Makati, like Park Central Tower, versus other high-end properties in the US?
Oh, honestly, I have no idea also versus in the US. I guess in terms of high-end properties here, especially in Makati CBD, like Park Central ba is in Makati CBD? Yeah. So what the thing that you have to remember is it's very scarce. I mean, there's only a few units left available in the market, and so that alone helps drive up capital values for developments in these very prime CBDs.
Again, I'll add to that, Tim. I think also the reason why developments like that command a very high price is the scarcity, and Makati CBD is fully built up. There's not a lot of new launches for that high-end, super high-end segment in the last 2-3 years in the Makati CBD, in Fort Bonifacio, and in Rockwell. So you can only think of Balmori in Rockwell, Aurelia in Fort Boni, Park Central, and Estate in the Makati CBD. So those are all playing in that same category and price point. And even during the pandemic, they were able to maintain the pricing. Yes, the take-up was lower because of the pandemic, but it shows you how premium that product is, even during the pandemic.
Thank you, Rich and Tim. Yes, Miguel, let's choose PH as much as possible. From Juan Ortiz, Joey, it was mentioned that horizontal suburban properties are gaining traction, yet year-on-year change in units sold is negative 14%. How do you reconcile outlook with this number?
Okay, there was a drop. So that's negative 14%. But again, that is not as substantial compared to the drop in take-up in Metro Manila vertical condo market, right? Where there's 100% decline in terms of take-up, net backouts. So that's what we've also been recording. But again, if you look at the horizontal project take-up, and Tim might want to add a few insights later, these projects are about 90-95% taken up as of end of 2021, and there's a strong demand for the end user market still for these projects. So that should sustain the take up for these projects for the attractiveness beyond 2022. So again, the top locations for these types of investments are Cavite, Laguna, Batangas, Pampanga, Bulacan, and Tarlac. And in fact, most of the new launches are also coming from these areas. So that's an indicative of future demand for these horizontal projects in these key destinations outside Metro Manila.
Joey, I think this is our last question for this morning from Rufa Fagao. Are the bank rates for financing properties going to go low or high in the upcoming years?
Well, when we were discussing our slides, what we have seen is that rates are in fact increasing. And as I mentioned earlier, that is one factor that we need to watch out for, especially when the demand starts to pick up, starts to recover. Plus, developers will also be wary. Will they be retaining the promos and payment schemes and discounts that they implemented during the pandemic now that the demand is starting to recover. So again, these are just two of the factors that investors and users need to be mindful about: the movement in interest rates, especially the increase, and also the changes in payment schemes and promos that developers are implementing, especially once demand starts to pick up.
Thank you, Joey. Thank you, everyone. We had a very good discussion this morning. Thank you to our speakers and panelists from Colliers, Joey Roy Bondoc, Dom Fredrick Andaya, Tim Teodoro, Paul Chua, Paul Vincent Ramirez, and Richard Raymundo for shedding light on the current landscape of the real estate sector and providing us useful insights and recommendations as we face the next 11 months of 2022. We would like to once again thank our event partners, the British Chamber of Commerce Philippines, Canadian Chamber of Commerce in the Philippines, the Wallace Business Forum, the Department of Human Settlements and Urban Development, Business World, the ABS-CBN News Channel, and the Philippine Daily Inquirer through Inquirer Property. And to officially close our program, let's hear our final remarks from our Managing Director, Mr. Richard Raymundo.
So yeah, thank you everyone for attending our briefing. We had a very bumpy start to 2022 when we had the Omicron surge in January. Well, the good news is that it is not as severe and the recovery is faster than the previous strains. It appears to be on a downward trend, and hopefully we get to a lower alert level by the end of February or March. So what does this mean for property? So for the office segment, office occupiers would hopefully see the need to slowly go back to the office, and this would eventually lead to more office demand and expansions. For residential, this could signal developers to now launch new projects after the dearth of new supply in the market last year. For retail, this could mean more mobility with mall traffic and spending already improving in December to pre-pandemic levels. And then for hotels, the resumption of domestic tourism via revenge holidays, as we saw the popularity of local destinations like Palawan and Boracay last year. So this year, for the Year of the Tiger, we hope that fortune favors the bold, that the property industry starts its long-awaited recovery, and that we finally get out of the pandemic. Thank you for attending our briefing. We have a lot of questions that we haven't answered. We will get back to you via email. We will reach out to you, and stay safe and healthy. Thank you again. Bye.
Thank you, Richard, and thank you to everyone who joined our webinar today. You're welcome to reach out to our team if you have further questions, if you would like to receive more information in the office, residential, industrial, hotel, real estate sector. If you'd like to stay updated on latest news and insights in the Philippine property sector, please follow and subscribe to our online channels. We have our website, colliers.com, and we are present in LinkedIn, Facebook, Twitter, and Instagram. If you'd like to hear more from Joey, he has a regular column in the Philippine Daily Inquirer called Colliers Review. It comes out every Saturday in the newspaper property section. And finally, we're pleased to announce the launch of our very own podcast called Colliers Insights Podcast, hosted by none other than Joey Roy Bondoc. You may catch new episodes of this podcast on the website starting this week. Once again, on behalf of Colliers, thank you for joining us today. Stay safe, stay healthy, and we look forward to see you again in our next property briefing. We hope that as things gradually get better, we finally see each other in our next briefing face-to-face. Goodbye, everyone, and wish you all a fantastic 2022.